There are people still begging and praying for their bear market, which obviously happened in 2022. I just don't get why people can't see that it was priced in back then. What we had in 2022 was the rate cycle, inflation, consumer discretionary spending got nuked, real wages got nuked, everybody got nuked, and all assets went down. And long duration assets, crypto, technology went down the most. The growthy end of technology was down 70 odd percent, crypto was down 70 to 80%, and it was a bloodbath. That perfectly coincided with the forward-looking indicators of liquidity and financial conditions index, which suggested the same thing. Now, these are forward-looking, and they suggested that in 2023, we will see that economic weakness. Now, it's probably a quarter or two later than expected, but I'm thinking we will flirt or be in recession this quarter and next quarter. And I've been saying that for quite a while now, but it matters not. It doesn't matter unless you're trading the Russell 2000 or the old economy or oil or copper. Those things trade present day economic conditions. So the ISM, which is right near its lows, start to try and turn. It's at lows that's consistent with a mild recession. So do we get the recession? Do we not? Do we get to 0% GDP growth? Doesn't matter. It was all priced into the stuff I care about last year. Got down to pricing 38 in the ISM. It was overdone. Crypto, same kind of thing. So as liquidity turned, I started recommending buying markets. It was first ETH in June. That was the first one to bottom of 2022. And then October, November, December, crypto and technology stocks. And basically I've been long and adding ever since in all of that. Everybody thought I was a total moron, which is fair. I can be a total moron, but it's been quite right. It's been a bloody good call, if I'm honest. You know, I wrote about it in depth in Global Macro Investor. That's my institutional research service. Also in Pro Macro, we'll talk about Pro Macro in a bit, on Real Vision, where I really went through in depth why. And there's like 2,000 charts behind the analysis. So lo and behold, where we are today, Nasdaq's up almost 50%. The exponential age technology basket, when I look at it, it's up 63%. And crypto has gone bananas. Bitcoin's up 119, ETH's up 63, and Solana's up 500%. So pretty good. And exactly in line what I've been imagining, which is macro spring. Macro spring and crypto spring are the same thing because macro is crypto. I've explained all the way through. These are not different things. And there's a bunch of old macro people who are like, oh, I don't like that bloody crypto stuff. It's nothing to do with macro. It's driven by exactly the same cycles. It's completely in line. So we saw spring and we saw choppiness, sideways ranges, a squirt up in the beginning, then slowed down. And then we're now getting into late spring. Late spring, we're starting to see what I refer to as the banana zone, which is this massively positive end of year phase. Normally speaking, again, probabilistically speaking, no guarantees around here, so don't try and hold me and go, well, it didn't go up at the end of the year, you're a bastard. I'm bored of that stuff. Probabilistically speaking, it goes up into the end of the year, and usually fast. And nobody catches it, and everybody's chasing it because they're all trying to chase performance for the end of the year and prove to their investors that they had the right trades on, which obviously they didn't because all the institutions have been massively underweight. So that, I think, is what's taking place, and that's usually the end of crypto spring and macro spring. Then we start transitioning to summer. Summer is when rates start coming down, box looking like it's starting to be ticked. When inflation falls, that's happening. And as you know, my views on inflation are it is not sticky, it's mean reverting, and it will go back down to 2% or lower. I think it actually goes negative in this cycle, and I think core inflation will go negative this cycle too. So, interest rates falling, inflation falling, unemployment rising, and then when you look at the forward-looking indicators, growth will be picking up from the floor. That is the perfect macro environment. Then we're coming into election year, as all of these macro springs have been since the Great Reset of 2008. They're all the same timing. Macro summer is the same as the election year. is the same as the halving year in Bitcoin. It's all the same bloody thing. So that is about to play out. So 2024, I think, is going to be a pretty wild ride. Normally these years tend to have periods of sideways consolidation or corrections, and then these huge spurts. And we tend to see a couple of those during the year. So nothing's going to be a straight line, but it should be an extremely good year. And then 2025 will be even better. That's usually the batshit crazy year, which is the transition from macro summer into macro fall, where everything kind of goes exponential before you start transitioning to winter, rates start going up again, markets pull back again, and we go through the same cycle. I get your point. You need a lot more energy for all of this, but I think it gets solved in different ways. And yes, of course, energy stocks will go up when we go into crypto summer, because crypto summer is rising growth, energy usage goes up, and it all works fine. I just think it underperforms. I mean, just run every chart of any other sector versus technology over the last 20 years, 30 years, everything underperforms. And if you run any other chart in technology against crypto, it all underperforms crypto. I've become, that bell curve I keep talking about. I've become the moron on the left, or maybe the wizard on the right, the Jedi. But I've just got rid of all that noise in the middle. Is what am I trying to do here? I'm trying to capture the biggest macro trend of all time. And the best way of doing it is buy the stuff that goes up the most and hold on to it for dear life and add into any sell-off. That is the single, simplest investing strategy I can possibly give you. And it will make you more money than any other. And you might say, I don't want to live with the volatility, then use the business cycle. When the business cycle peaks, you get out. I've proven to myself that was suboptimal. I didn't make as much money doing that as I had by buying and holding and adding into the dips. Eric, the scientist. Eric, it's good to have somebody here who knows what they're talking about. Hi, Raoul. I presume you are a scientist. Hi, Raoul. I hear people looking at recent bottom pattern in RSM saying they think the recent upturn was a false breakout, maybe due to a disinflationary trend to boost it, and they think we'll have another leg lower, double dip manufacturing recession. They're like, oh, investing in the stock market. UK stock market has literally gone nowhere for 20 years, nor's the European market. European tech stocks, UK tech stocks, is just nothing. So you have to take currency risk by investing in the US. So you got to hope your currency keeps going down. Good thing is the dollar's in a secular bull market, and tech stocks go up so much that even if you're in the cyclical down phase in the dollar, which I think we're now starting, you'll still outperform, but you're still fighting that trend of the dollar going down, but tech stocks need to go up more. It's not bloody easy. I mean, there is limited opportunity for European investors. Well, European investors just buy bloody LVMH, it just seems to go to the moon every single day because it's scarce supply assets. Honestly, it's the same game.